September is not a quiet month for your money. 7 separate deadlines are either opening, closing, or reaching a critical point between now and the end of this month. Some of them have hard cutoff dates. One of them expires on September 30th, and whatever balance remains simply disappears permanently, with no exceptions and no extensions. And one of them was updated 6 days ago by the Social Security Administration and has not been covered anywhere in plain language yet. These are not proposals, nobody has to vote on them, the dates are already set, and the windows are already moving. That is what this video is. And stay with me to the end, because the 7th item is the one that was just updated, and it affects families dealing with the most serious medical diagnoses. Nobody from Social Security is going to call them to explain it. I want to make sure it reaches the people who need it before another month goes by. My name is Nolan Carter. I track the quiet rule changes and deadline shifts inside government systems, the ones that decide whether money that is legally yours actually reaches your hands on time. I believe that if 7 deadlines are moving in September with your name on them, you deserve to hear all 7 in plain language, in one place, before any of them close. If this is the kind of information you want reaching you before it costs you something, subscribe right now. This channel covers exactly this: the benefits, the deadlines, and the rule changes that rarely get explained clearly until the window has already closed. Now, 7 items, in order, starting with a piece of mail that is arriving in your mailbox this month and that most people set aside without reading, and that costs them real money every single year because of it. Number 1, the annual notice of change arriving now, acting before October 15th. Between September 1st and September 30th, every Medicare Advantage and Part D plan is legally required to send every enrolled member a document called the Annual Notice of Change. Your plan has to send it. What it tells you is every change your specific plan is making for 2027, which drugs are moving to a higher cost tier or being removed from coverage entirely, which doctors are leaving the network, whether your premium is going up, and whether benefits like dental, vision, or your over-the-counter allowance are changing. Most people receive this letter and set it aside. It arrives looking like every other envelope from an insurance company, with nothing on the outside signaling that this particular one determines what your prescriptions cost you starting January 1st. Here is what it costs to set it aside. A drug moving from Tier 2 to Tier 4 can mean $50 to $100 more per month in copays $1,200 a year on a medication you are already managing. A doctor leaving your network on December 31st means either finding a new physician or paying out-of-network rates starting January. And a premium increase of even $15 or $20 a month adds up to $240 over the year. Every one of those changes is in that envelope. And October 15th is when your ability to do anything about them opens. When your ANOC arrives, check 3 things specifically. First, look up every medication you currently take against the new formulary list inside the document. Not the general drug name, the exact name and dosage. Drug coverage is built at that level of detail, and a plan that covers your medication at 1 dose can treat a different dose entirely differently. Second, confirm your primary care physician and any specialists you see regularly are still listed as in-network for 2027. Provider changes take effect January 1st, and you need to know before October 15th, not after. Third, note any change in your premium, your out-of-pocket maximum, and your hospital day rate. Those 3 numbers together tell you far more about what a plan actually costs than the monthly premium alone. And one more thing about September specifically. Free Medicare counselors called SHIP counselors, which stands for State Health Insurance Assistance Program, are still accessible this month before the October enrollment rush begins. These are federally funded advisors who do not sell anything and do not earn a commission. They will sit with you and compare your options against your actual medication list at no cost. By November, their appointment slots are largely gone. September is when to call. Dial 1-800-MEDICARE and ask to be connected to your local SHIP program. Number 2, September is the final measurement month for your January check. The 2027 Social Security Cost of Living Adjustment is calculated using one specific inflation index, the CPIW, the Consumer Price Index for urban wage earners and clerical workers averaged across July, August, and September of this year, compared against the same 3 months last year. July's data is already collected, August is already collected, September is the third and final piece. When the Bureau of Labor Statistics publishes September's inflation figures in mid-October, the Social Security Administration announces the official 2027 COLA almost immediately after. That announcement is expected October 14th. Current independent projections from the Senior Citizens League, AARP, and independent analyst Mary Johnson are landing between 3.4 and 3.6%. On the current average benefit of roughly $1,937 a month, a 3.5% increase adds about $68. That would be the largest adjustment in 4 years. Now here is something most people are not connecting to the COLA right now, and it can quietly cost a senior several $100s in unexpected taxes next January. The thresholds at which Social Security benefits become subject to federal income tax, $25,000 for single filers, $32,000 for married couples filing jointly, have not changed since 1983 and 1993. They are not indexed to inflation. They do not adjust when your benefit goes up, which means a senior whose provisional income sits just below those thresholds today may cross them for the first time next year simply because their Social Security check increased by $68 a month. The benefit went up. The tax on the benefit went up with it, and nobody sent a letter explaining why the tax bill looked different in April. Provisional income is all of your non-Social Security income, wages, pension, IRA withdrawals, interest, plus 50% of your annual Social Security benefit. If that combined number currently sits within $1,500 to $2,000 of either threshold, run the updated calculation after the official COLA announcement in October. The new $6,000 senior deduction from the One Big Beautiful Bill Act may help offset this by reducing your adjusted gross income, but you need your specific numbers in front of you to know. Do not wait until you are filing in April to find out. Number 3. The benefit that expires September 30th, and that will not roll over. If you are enrolled in a Medicare Advantage plan that includes an over-the-counter benefit, your Q3 allowance covers the months of July, August, and September. Whatever balance remains on that allowance at 11:59 p.m. on September 30th disappears permanently. It does not carry forward to Q4. It does not appear as a credit on your next statement. It does not convert to anything. It is simply gone. Studies on Medicare Advantage enrollment consistently show that the average senior with an OTC benefit loses more than $500 a year in unused allowances, not because the benefit was taken away, but because they did not spend the balance before each quarterly deadline. Over the course of a retirement, that is thousands of dollars of benefit already paid for through plan premiums, returned quietly to the insurer because nobody used it in time. Here's the action, and it takes one phone call. Call the member services number on the back of your Medicare card and ask this exact question. What is my current Q3 OTC balance? That is it. They will tell you the exact dollar amount remaining. Then spend it before September 30th. Eligible items typically include vitamins and supplements, pain relievers, dental care products, blood pressure monitors, first aid supplies, cold and allergy medications, and a range of other health and wellness items depending on your specific plan. If you are not certain what your plan covers, ask that same representative for the eligible item list while you have them on the phone. And if you are not sure whether your plan includes an OTC benefit at all, that same phone call will tell you. If it does not, the Medicare open enrollment window that opens October 15th is your opportunity to switch to a plan that does for 2027. But that is only useful if you already know what your current plan does and does not include, which is exactly what the ANOC letter from item 1 tells you. Number 4, the paper check transition and why September is the right time to act. If you or someone in your household still receives any federal benefit payment as a paper check in the mail, Social Security, SSI, VA, benefits, the transition to electronic payment is ongoing and September is the best time to complete it. The federal government began phasing out paper checks for most payments starting September 30th of last year. That transition has carried into 2026, and the Social Security Administration is still actively reaching out to the remaining recipients who have not yet switched. The push is clear, and the direction is not reversing. The longer a paper check remains the delivery method, the greater the risk of a payment being delayed, lost, or intercepted. Paper checks are roughly 16 times more likely to be lost or stolen than an electronic transfer. There are two options, and both are free. The first is direct deposit into a checking or savings account. Go to ssa.gov, log into your My Social Security account, and update your payment method there. Or call Social Security directly at 1-800-772-1213 and tell them you want to switch to direct deposit. Have your bank's routing number and your account number ready. Both are printed on any check from that account, or you can call your bank and ask them to read the numbers to you. The second option exists for people who do not have a bank account and do not want one. It is called the Direct Express card, a prepaid debit card issued by the U.S. Treasury, not by a private bank. Your benefit deposits onto it automatically each month, and you use it like any debit card. Call 1-800-333-1795 to request one. No credit check, no bank account required. If you genuinely cannot use either option, no banking access, a documented hardship, a situation that makes electronic payments unworkable, a hardship exemption process exists through the U.S. Treasury at 1-877-874-6347. But that exemption has to be applied for. Simply continuing to expect a paper check without taking any action is not a plan that holds. Now, two of the items we just covered connect directly to something most seniors have never thought to check. Whether Social Security is withholding too much from your check or anything at all before it ever reaches your account, and whether the way your benefit is currently set up is quietly sending money to the IRS a full year early. Both of those are in the Senior Money Defense Playbook, along with the provisional income calculation that determines whether the COLA from Item 2 just pushed your benefits into taxable territory for the first time. If any of those land, the guide pays for itself on the first page that applies to you. Link is in the description. Now let us keep moving. Number 5. Property tax exemption deadlines closing in most counties right now. In the majority of states, the window to apply for senior property tax exemptions, assessment freezes, or deferral programs falls somewhere between August and October. A significant number of counties set their cutoff in September. If that window closes without an application on file, you pay full property taxes for the entire next year. There is no retroactive recovery. There is no late filing that fixes it after the fact. The deadline passes and the savings simply do not happen until the following year at the earliest. These programs exist in every state. An assessment freeze locks your home's taxable value at the level it sits when you file, so that rising home values in your neighborhood stop translating into a rising tax bill. A senior overlay exemption knocks a flat dollar amount off your assessed value before your tax rate is ever applied. A school tax exemption, available in a number of states for homeowners 65 and older, can reduce or in some cases eliminate the largest single line on your property tax bill. And most eligible seniors have never applied for any of them, not because they do not qualify, but because nobody told them the programs existed and required a separate application. The action here is one phone call this week. Find your most recent property tax bill and look for the county assessor or tax commissioner's number. It is printed somewhere on that document. Call and ask this exact question. I own my primary residence and I am 65 or older. What senior property tax exemption, freeze, or relief programs are available to me, and what is the application deadline? Write down every program they name and every deadline attached to it. If any of them close this month, ask what form you need and request that it be mailed or emailed to you today. Number 6. The quarterly estimated tax deadline, September 15th. If you receive income without automatic tax withholding, IRA withdrawals, pension distributions, rental income, or any self-employment, you may be required to make quarterly estimated tax payments to the IRS. The third quarter deadline for 2026 is September 15th. Missing it generates an underpayment penalty calculated at approximately 8% annualized on the amount that should have been paid. Two things are worth checking before that date. First, if your income increased this year for any reason, a larger required minimum distribution, a one-time sale, additional rental income, your Q3 payment may need to be higher than your Q1 and Q2 payments were. Underpaying now creates a penalty you find out about next April. Second, if you have not already accounted for the new $6,000 senior deduction from the One Big Beautiful Bill Act in your quarterly calculations, you may be overpaying. That deduction reduces your adjusted gross income, which in turn reduces your quarterly tax obligation. Either way, September 15th is the moment to verify your numbers are current, not April, when the damage is already done. Number 7, the Social Security update from 6 days ago that nobody has explained yet. On the 11th of August 2026, the Social Security Administration announced the addition of 14 new medical conditions to its compassionate allowances list. The total number of qualifying conditions is now 314. Here is why this matters and why I saved it for last. The standard Social Security disability application process takes 3 to 6 months or longer. For families dealing with a serious diagnosis, that timeline is not a bureaucratic inconvenience, it is months of financial pressure at the exact moment when medical costs are highest and income is most disrupted. The Compassionate Allowances program exists to fix that. Conditions on the list are considered so severe that they clearly meet Social Security's definition of disability, and applications flagged under this program are typically approved in days or weeks rather than months. Not eventually, days. The 14 conditions added on August 11th include rare neurological disorders, serious genetic conditions, and certain cancers. The full updated list of all 314 qualifying conditions is available at ssa.gov/compassionate allowances. Here is who needs to hear this specifically. If you or a family member has received a serious diagnosis recently and has not yet filed for Social Security disability benefits, check the updated list before filing. If the condition qualifies, the application moves to the front of the line. And if you or someone you know has already filed and is currently sitting in a lengthy review queue, check whether the condition now appears on the list. If it does, contact Social Security specifically and tell them the application should be reviewed under the Compassionate Allowances program. That designation can change the timeline from months to days, and nobody from Social Security is going to call and explain that the list was just updated. This update happened 6 days ago. The people it helps most are the ones who find out about it this week, not the ones who discover it 6 months from now when the waiting is already behind them. Now let me bring all 7 of these together into exactly what to do before the end of this month. First, when your annual notice of change arrives, or if it has already arrived, read it before you do anything else on this list. Check your medications against the new formulary, confirm your doctors are still in network, and note any premium and out-of-pocket changes. If anything moved in the wrong direction, you have from October 15th to December 7th to switch plans. Call your state's SHIP counselor in October before appointments fill up. Second, after the official COLA announcement on October 14th, calculate your provisional income with the new benefit amount before you plan around the headline number. If it sits close to $25,000 as a single filer or $32,000 as a married couple, run the updated numbers to see whether your Social Security benefits are crossing into taxable territory for the first time. Third, call your Medicare plan's member services number today and ask for your current Q3 OTC balance. Spend whatever remains before September 30th. That balance does not roll over and it does not come back. Fourth, if anyone in your household still receives any federal benefit by paper check, make one of 2 calls this week. Social Security at 1-800-772-1213 to set up direct deposit, or Direct Express at 1-800-333-1795 for the prepaid card. If neither is possible, call the Treasury Hardship Line at 1-877-874-6347. Fifth, call your county assessor this week and ask what senior property tax exemption and freeze programs are available to you and what the application deadline is. If any deadline falls in September, ask for the form today. Sixth, verify your Q3 estimated tax payment before September 15th. Account for any income changes this year and for the $6,000 senior deduction if you have not already. Seventh, if a serious medical diagnosis is part of your situation or your family's right now, go to ssa.gov/compassionate allowances today and check whether the condition appears on the updated list of 314 qualifying conditions. If it does, file or notify Social Security immediately. Now, two of the items on today's list, the provisional income calculation that determines whether your COLA pushes your benefits into taxable territory, and the W-4V withholding question that determines whether you are sending money to the IRS a full year before you owe it. Both connect directly to chapters in the Senior Money Defense Playbook. If either one applies to your situation, that is real money sitting in the wrong place. Link is in the description. One honest note before we close. Everything in this video is general education, not personal legal or financial advice. Deadlines, program rules, and eligibility requirements vary by state and by individual circumstance. Always confirm your specific situation directly with the relevant agency or a qualified professional before acting on anything covered here. Now, here's what I want you to do with this. Think of one person, a neighbor, a sibling, a parent, who has a Medicare Advantage plan and has not opened their annual notice of change yet. Send them this video. 7 deadlines, several of them closing before October arrives. You may be the only reason someone they love does not miss the one that costs them the most. Subscribe to this channel and turn on notifications so the next update finds you before it costs you anything. Thank you for watching. I will see you in the next one.